welcome everybody on our third Dorsum Expert Talk. And this episode, we're gonna talk about what happened in the last year, what was the main narratives, and what can we expect from this year in 2026. And our guest is Ivan Wu, who is an analyst at the Block research team. And my name is Peter Kanti. You already know me. I'm heading the blockchain and digital assets team at Dorsum. So, quick introduction from you, Ivan. How are you? How are you today?
Yeah, I'm good. Thanks, Peter. Thanks for having me. Yeah, really excited. I sit on the Blocks research team. We published our 2025 end of year report a couple weeks ago now, and yeah, it's a really hectic year that we had in 2025. Lots of things happening on the
Yeah,
institutional side, and seeing really interesting reaction from the crypto native kind of side, especially sentiment on crypto Twitter. So excited to jump into that.
yeah. That's basically our first topic. So, what happened last year? I think it was a pretty conflicted year, right? So, I mean, a lot of things happened, and also it was very. I think it was very polarizing. If you just check it out, the whole market cap went up for $4.3 trillion, I think, and then now it's at 2.2. So, I mean. I'm not sure what was the end of the year, but it was not 4.3 definitely. So a
Yeah.
lot of things happened. How did you see that?
Yeah. Uh, I mean, yeah, like you said, it's very, very kind of choppy year. I think Bitcoin finished just barely in the red at the end of the year, and since then, this year it's been quite an interesting first quarter for 2026. But yes, what the data really shows that we're seeing a big kind of discrepancy. Um, we're seeing a lot more activity on the TradFi side through ETF vehicles, through digital asset treasuries, seeing a lot more sophisticated instruments, a big rise in options writing and volumes that we're seeing. Um, and on the other side, we're seeing meme coins that really led most of the latter half of 24 and into 25 that really come down in terms of attention and speculation. And so what we're really seeing is kind of the shift towards more sophisticated instruments and participants in the market.
Yeah. For me, I mean, I think the biggest narrative, if I could say, for last year was the kind of the um, the institutional adoption, right? So I mean, a lot of things happened. I mean, certain new ETFs came to the market. I mean, certain new, let's say, type of exposure came to the market in terms of these uh, digital asset treasury companies, so called, who keep crypto on their balance sheet, basically. So I think it was quite a mix up, and it's also worth to mention, because we're gonna talk a little bit about the regulation as well. That in the US we have now a pro crypto administration, and that started basically in January, right? So all
Yeah.
these adds up, I guess.
Yeah, absolutely.
Yeah. What do you think? What was the biggest misconception that professionals had last year? I think that's the interesting thing. What do you think? What was it?
Yeah, I think 2025 really saw this kind of gear shift within a lot of traditional finance firms where all of a sudden we had a lot of payment providers, banks, institutional participants really kind of turn the corner on crypto and on blockchain as a whole. We saw a lot of proof of concepts move into product demos, into live launches and actual product launches. And so uh, it was really exciting for people on in the know that kind of knew that this was happening behind the scenes. I think a lot of people were caught off guard as well, just the speed and the velocity at which things got moving. When you look at things like stable coins, real world assets, tokenization, these all of a sudden I think throughout 2025 just really picked up steam, and continuing into 26 now we're seeing a lot of these trends really continue to move along.
And what do you think? Are we or are these industries getting? Is it mature, or is just getting to be mature?
I think we're just
What
getting
do you
started.
think?
I think we're just getting started. I'd point to stablecoins. Stablecoin market cap is still currently around $300 billion. I think we're very, very early in that story. We're seeing lots of really good adoption. Anecdotally, there's a lot of great evidence out of Eastern Europe, really underserviced areas in terms of banking, personal finance. And so we're seeing stablecoin adoption really pick up in those areas, and I think that's something that will continue to grow. Even in the U.S. side, right? We're seeing major brokers start to allow the trading of stablecoins, or they're really starting to redeem stablecoins like at dollar value, and so that's really exciting and allows much less friction when we're transacting between the two systems.
Yeah, and we're going to talk about it deeply. And getting back to institutions, I remember when I was at Consensus in May. There was a big narrative around institutional adoption, even about DeFi. So how can traditional institutions, banks, tap into DeFi? What do you think about this? Where are we now in this regard? And what are the key use cases you think should bank think about? I mean, globally, anywhere, it doesn't matter if it's a regional sense or whatever about DeFi. What's the use case you think that they should think at first? What do you see in the market?
Yeah, definitely a very exciting space, right? We just had not too long ago, BlackRock announced that they're getting more involved in the DeFi space. I think Apollo as well, and they're starting to become very active, right? Taking on token positions as part of their portfolio, and so I think those are all really good signs that we're moving towards kind of this not just adoption of crypto, but adoption of DeFi, like you said, and I think that opens the door to a lot of different things. I think DeFi introduces a lot of novel use cases for these different instruments that traditional finance might not have, are still kind of grappling around with and trying to really understand. I'd say, right off the bat, one of the things is around AMMs. The idea that you can trade against not a counterparty, but within a protocol. There's a lot of benefits there that we can see in terms of reduced fees, access to capital, really moving from a restricted system almost geographically to now a permissionless system, and I think that's really exciting.
Yeah, but in terms of DeFi, I think the problem is that it's not regulated, right? So I mean, how can you make sure if you transact with these protocols that everything is according to regulations? I mean, KYC wise and transfer rule wise and AML wise, I can name a few, right? So that's the hard part, right?
For sure. Yeah, and I think as we make steps in that direction, what we're seeing now is we're starting off with permissioned ecosystems, permissioned protocols. On to that end, very much still trying to figure out what does that system look like, and limiting the available partners, the participants, and so as we figure that out, I'm sure that kind of pool of participants will expand.
Yeah, we're gonna see that, I hope. And let's jump into or shift into regulation a little bit as we just stepped into it somewhat already. So I'm really interested in how do you see the EU and US in terms of regulation. I mean, I must probably know that in the EU we have the MiCA. It's already in motion, let's say. So it's in full speed, and we already have a couple hundred, maybe 100 plus licenses across Europe and some local as well. So and the US just introduced last year. They introduced the Genius Act, but the market part of the act is still not enforced. It's just a plan, right? So how do you see these two big economic regions affecting how the market works?
Yeah, I think on the U.S. side, 2025 was a very big shift with the resignation of Gary Gensler, and since then there's been a number of key appointments within different U.S. bodies, and then as you mentioned, the Genius and Clarity Act that we're still kind of working through. Those are really exciting developments for crypto as a whole, and I think provides a lot of the infrastructure and the systems that we need to really enable crypto within these jurisdictions. I would say the velocity within the US has really increased in the last 6 to 12 months. We've seen a lot of really positive improvements, right? Whether that be the generic listing standards for the ETFs that I think will really push the pedal to the metal in terms of how getting these different ETF exposures to different instruments, and that's what we're seeing now with a number of pending ETFs for a bunch of different assets, and so that's really exciting. On the EU side, I think MiCA has been a really interesting step in terms of getting different exchanges, companies registered and then passported to operate across the EU, and I think that will really enable a lot of the growth in the EU for the next little bit.
Going through this kind of pace, let's talk a little bit about stablecoins. I think for me the biggest narrative of 2025 was stablecoins. I mean, it was all around in every discussion, even in the EU as well. So can you tell me about a little bit how did it work out, and what did you find in your research regarding last year's stablecoin involvement?
Yeah, I mean the data around stablecoins is really exciting, right? So we closed 2025 and currently still sit about just under 300 billion in market cap. I think we're up about 45% since the last 12 months, and we've seen consecutive months of this
45%. 45% up compared to 2024, the end of 2024, right? You mentioned.
Yeah. So really exciting stuff, and we're also seeing an increase in transactions involving stablecoins, right? So the sending of stablecoins between participants, and so we're seeing these increases along with the regulatory structure around stablecoins. The Genius Act outlining clearly defining rules around how stablecoins are issued and moved around, I think increases investor confidence and participant confidence, right, in the system. And so seeing lots of really positive supports to that effect.
And most of these stablecoins are in US dollars, right? So I mean 99.9 or 99.5 whatever percentage. I don't have the number, but above 90, I'm sure. Right?
Yeah, something to the tune of the vast majority of current stablecoins in circulation are USD denominated, and that's one thing that I'm sure we'll see change in the coming months, years. Seeing lots of really positive developments for different currencies right across the world: Canadian dollar, euro.
Yeah, I mean, last in our last episode, I talked to Rich Rebar, who's kind of working in this Euro stablecoin sphere. I mean, seven or eight European banks came together, made a consortium, and they try to introduce this Euro stablecoin. So definitely others are coming. But I mean, maybe it's a really vague sample or mental model. But for me, it's an interesting thing to thought about when all these kind of protocols and companies try to settle in stable coins, and all these US dollar based. It's kind of the crypto dollar versus petrodollar, or the petrodollar of crypto, right? So I mean, it's an interesting but vague mental model to think about it.
For sure.
Yeah. So How do you see the role of the actual role of these stablecoin settlements across border? For example, what does it mean for an SME to use these assets? I'm just curious, what do you see in the numbers? If it already started, or just people sending across their money all over, and that's what it is.
Yeah. I think, the use cases for stablecoins has always been something that, we're trying to get a better grasp on. It's one of those areas where it tends to be a little bit scarce, the data on, what exactly does this transfer imply? Is this a sale? Is this, like you mentioned, just a transfer? Anecdotally, I can say that the evidence is very strong for SME adoption on stablecoins. Really, the enablement here is fast settlement times and cross-border transfers, right? So the ability to be able to, go from a USD to a non-USD currency through stablecoins is really exciting. And to be able to do that in, T+0 time and near instant settlement is really exciting for a lot of small medium businesses.
And cheaper
And cheaper.
Well.
Absolutely. Absolutely. And so on the funding side, we're seeing a lot of demand for these companies that are doing stablecoin settled payments, right? Specifically targeted at SMEs, at institutions, really anyone that processes payments, especially internationally, right? That's one of the major pain points of sending money internationally is cost and time. And so to be able to solve those pain points is really key for stablecoin growth.
Yeah, definitely, and it's a key aspect. Yeah. And I just wanted to dive into an interesting, maybe for some of our listeners, a little bit of a futuristic topic. But if we have these programmable money, programmable stable coins, it comes out, the kind of the progression that if there will be AI agents, they will use this for payment. They will use this for me to buy shoes or whatever. They use this to buy, human labor to do their evil plan, whatever. So I mean, how do you see the agentic part of it? Have you seen that it has started already? Or it's just more about the future, and it's good to talk about it, good to post about it.
Yeah, I think that's one of those frontier areas where we're still quite early. We're seeing, positive developments kind of to that end. I think the X402 protocol's really interesting. So for sending stablecoins across the base network and to some of the other networks. So we're seeing the infrastructure build out for a lot of these use cases that you've mentioned, like agentic payments, micropayments. But again, it's one of those areas where we're definitely early. I think the use of stablecoins here is a good example of generally kind of the crypto use case, right? Like as you and I, when we use crypto, there's still a number of friction points, right? Whether that be fragmented liquidity, different having to bridge across chains. So there is some friction there, right? And the idea is agents are able to come in and be able to ingest all of this data at one time and really see and really optimize, right, the path of how do we get from point A to point B across different chains, across different liquidity pools. So I think that's what the goal here is, right, is to be able to use agents to capture a lot of the efficiencies here and to make that capital more efficient.
Okay, so it's more about having these bottlenecks and friction points, and we try to make it smoother with agents, because we don't have to log in and sign it and all these kind of things. Our agents will do it for ourselves, but the thing is, it's not really about, or not at first, it's not about in the first steps, it's not about my agent goes up and buys me a Nike shoe or whatever, right? So it's more about the first part than the latter now.
Yeah.
By any chance, can you? I'm just interested in the data which you see. Can you somehow differentiate between human type of payments or transfers or agentic type of payments or transfer? Is there a way for that? I'm just curious. Just an off-topic question.
That's
for
the
me.
$1 million question, right? Is can we tell what the stablecoin transfer is for? What I can say is there's a lot of pattern recognition, right? There's a lot of work that we can do in terms of has this wallet or agent, what types of patterns and behavior are they engaging in, and based on that, can we categorize that as humanistic behavior, agentic behavior, and really looking at kind of wallet behavior to identify that.
Oh, okay, I see. So based on the behavior, you check patterns and try to figure it out, right?
Yeah.
Okay, that sounds really interesting and futuristic. Sure. And in the next part, I would like to talk about this is my favorite topic out of all of it is RWAs or tokenization. We can call it in a lot of names. I'm actively researching it with clients as well. So it's crazy interesting, I think. And so let's talk a little bit about that. What I just came to realize, I usually use RWA.xyz to list all these tokenized assets. I think it's not 100%, but close to, which they try to do it. And I just checked it out, and they said it's over $370 billion is on chain. These are the distributed and the represented all, but the distributed one, which is kind of more closer to the vision of tokenization, when you can freely change it through wallets, and it's not a permissioned kind of environment. It's over $25 billion. And I think when I last checked, it was only 16. I'm not sure about it. So yeah, it's getting bigger and bigger, right?
For sure. Yeah, there's definitely different metrics and numbers being floated there. In our report, we cited that growth is up approximately 3x. So we grew from about 5 billion to when we did the measure back when we did the report, approximately 16 billion. So absolutely, it's definitely one of the strongest areas in terms of growth. Lots of different use cases, right? And I think that's why we get so enamored by the whole RWA category, right? Once you break it down, there's a number of different things that we're looking at. There's treasuries, tokenized public equities, commodities, and different funds. And so what's really exciting for me personally is the tokenization of equities. Like you mentioned, I think there's a really interesting trade-off that we're seeing with equities is the idea of how permissioned or permissionless do we want to be, and then how accurate is the representation of the tokenized equity, right? So is this a truly tokenized, right, equity, or is this simply a wrapper of an equity that is being held in an SPV by a third party, and then we're trading the right to that asset? And so I think that delineation will continue to be a focus into this year, and will be a really important distinction that a lot of these companies will have to make.
Yeah, I think it's a really interesting thing when you think about the ETFs. ETFs are wrapping the crypto and putting it into the traditional system, and now we're doing it vice versa. We wrapping the traditional papers, putting it into custody, then issuing it on a blockchain basis. It's crazy interesting, to be honest. Just it's fun, I think, to think about it, but definitely that's the first step, right? So I mean, you have to start somewhere. What's your take on this equity and fund topic? What do you think? As I see the market, money market funds are really there. So there are many kind of funds and treasuries which do it, but I think I may be wrong, but stocks we just started recently to come into the blockchain, right? So I mean, there are some of these protocols, this XStock protocol, I think, and there are others. Ondo, I think, has another protocol, but they just started to come out, I think, half a year ago, right? So I'm not sure about the date, but roughly around that.
Yeah. So very exciting kind of developments in the last few months. Uh, X stocks is a great example, and I believe Robinhood as well in Europe specifically with their tokenized stocks. So they're on the part of the spectrum where I consider they're focused on market share first. So X stocks and Robinhood, they are live, and so they follow the vision of we'll custody the equity in a third party
Yeah.
in a third party company, and we'll provide kind of this tokenized asset for you to trade that grants you rights but not ownership of the stock. Um, and so I think the strategy here is very strong. Right, their idea is we want to go to market first. We want to be the first tokenized stock that people get their hands on, and that's what we're seeing. Right, we're seeing really strong trading volumes of these tokenized stocks, large multiples to the market cap. And so we see it's a very high velocity instrument that we're seeing these tokenized stocks. And so I think it's really interesting that there's so much demand, right, for these instruments, obviously in the markets. And so it's definitely a strong strategy. Personally, I think there's the second part of it, which is people like Ondo, Superstate, where they're bringing the tokenization process right onto the blockchain itself, where the asset issued on chain is the share itself. And I think that is really interesting because that
Yeah.
grants you the ability to do different things, right? You have shareholder rights, the rights to dividends. I think Tether recently introduced a dividend on their tokenized gold asset. And so I think these are the really interesting things that are happening in terms of what's next for tokenized equities.
Definitely. I think when I research this part, that there are not now, there might be a need for it. So if you think about it, what could you do? I don't know, maybe a year ago, maybe 2 years ago, you on chain, you can't do really anything else than crypto, right? Maybe you could do NFTs, and people are still arguing about it if it's a good investment or not. I'm not going to go into details, but definitely you could do the NFTs. You could do certain kind of crypto tokens, some able to do it, some yield generation in DeFi, some are not. And that's it, right? So that's what you could do. Maybe you could generate yield on certain platforms for providing loans or whatever. But this having funds, having maybe real estate, we're going to talk about it as well, and having also stocks and other equities and on chain. It's really I think widening your ability to invest on chain, and it's really a game changer, right?
For sure. Yeah, one of the biggest stories of the last few weeks has been HIP-3 tokenized equities. So the Hyperliquid Improvement Protocol 3, which enables a multitude of these different tokenized equities to be traded on Hyperliquid. And so, like you mentioned, we're seeing people on the TradFi side try to bring crypto to TradFi markets through ETFs, through DATs, through these different vehicles. At the same time, crypto is trying to bring stocks on chain, and so it's an interesting dynamic on both sides. And yeah, I think that market will continue to grow for sure.
It's really, really interesting. Also, there are, I'm not sure if you heard about it, there are European institutions as well who came out some tokenized funds as well. So it's happening here as well. I think the US is much more open in this regard. There are so many stocks and others which we can hear, but obviously the regulation is different. So that's also different. Okay, so what do you think about real estate? I mean, I think that's a real world asset, let's say, in a way.
Yeah.
Obviously, a stock and the company it is as well, but still a different kind of material, right?
For sure. I think tokenized real estate is like you said, right? Everyone kind of when you think of tokenized assets, that's a very straightforward one that we think of. to actually, execute on that plan, I think becomes quite difficult because of how geographically restricted and geographically siloed real estate is, right? Regulations for real estate varies very significantly, from Toronto to New York to Paris to London, and so I think we're seeing a lot of different protocols try to unify that experience, right? To kind of put that under one umbrella, um, to varying degrees of success. I think in Canada there's a few protocols that are working on it, even within Canada, right? The regulations and the rules that we have to follow vary across provinces and regions.
Yeah.
And so as a whole, I think definitely a very interesting space, and many people will try. To me, really interesting ones are, protocols like Parcel, right, where they're providing like Oracle services to protocols that want to, speculate on the price of real estate, certain housing markets. And so not so much the actual tokenization of these actual assets. I think the really interesting part is being able to bring this data on chain and being able to trade off the data itself.
Yeah, for our listeners, I think we should a little bit introduce Parcel in a way, because we can talk about real estate, which is kind of a house or an office building or a mall, whatever, and you do a kind of an SPV, and you kind of put those SPV tokens into the blockchain. So it's kind of a company stock in a way. I mean, just as a mental model. However, what Parcel does is just, if I'm wrong, correct me if I'm wrong. It does a kind of a synthetic asset of the prices of a region, of the average price of in a region for certain type of assets, real estate assets, right? If it's office or whatever in LA. And you can basically bet on the prices of that, or the appreciation of the prices in, for example, in LA, how the prices are going up or down, right?
Yeah.
So it's it's kind of like a synthetic real estate token, right?
Yeah, exactly. And so big issue around actual kind of tokenized buildings, offices, is it's quite hard to get liquidity, right? Secondary liquidity of, I can tokenize this asset. We can, let's say it's an office building that's cash flow positive. It's still quite hard to get liquidity for that, right? Simply because of the rules and regulations. As a foreign investor, what are your rights and protections to investing in real estate in a market that you're completely foreign to?
Yeah, definitely. And regarding the tokenization, we can hear a lot about this and that. What do you think? What's the hype and what's underappreciated? How do you see that?
For sure. I'll start with the underappreciated part. I think what a lot of institutions are looking at now, especially around tokenization of assets, is this legal certainty of ownership, right? It's very hard for a pension to say let's invest in a tokenized stock when the tokenized stock does not represent full legal ownership, right? When the alternative of just going out and buying the stock exists. And so I think
that's what we talked about, basically.
Yeah, exactly. And so I think the work being done there is very, very important to enabling kind of this institutional capital to really access these instruments. In terms of overrated, I'm not a fan of tokenized real estate. I don't know if that was clear in the previous kind of little bit. Simply just because of how geographically siloed it is. I know very little about real estate in Detroit. I would probably not invest in a cash flowing rental unit in Detroit. And so to me, that portion just never made a lot of sense. I totally get the notion to want to, put something on chain to be able to fractionalize, tokenize these assets, but just who is buying it on the secondary, I really don't know.
Yeah. I mean, no, it's a valid question, I think, because if you think about the information asymmetry, in a sense that you are very far from even we are not that far from Detroit in a in a in a kind of travel sense. But if you think about a European real estate or an American US based real estate, it's you can be really far about it, knowing nothing about it, what would happen with
Exactly.
it. Yeah. So it makes sense. Yeah. Okay. So pretty interesting. We're gonna see how it goes, right? So anyway,
For sure.
and let's talk a little bit about the role of AI. Everybody's about AI. I would like to talk a little bit about AI as well, and what does it mean for crypto and blockchain? How do you see that? I think most people can think about it pretty obviously, as everybody got spam, that it's a very good way to spam people, and new risks will emerge from AI. So definitely that's one topic, and I think you write a quite interesting part in your report about it, how important it is. Yeah. So what's with AI? How do you see what would it mean for this industry?
Sure. So, I like to think of AI similar to how I think of crypto. They're both, frontier technologies where we're seeing a very, very fast pace of iteration, right? Of coming out with new versions of iterating of development. I think our sponsor, GK8 and Galaxy Research do a great job of identifying kind of how AI has really impacted different attack vectors and different vectors of attacking crypto. And so I think the idea around AI and crypto specifically is that it's made these attack vectors a lot cheaper, right? Whether that be phishing, spamming, AI impersonation.
And unfortunately, better in quality if you think about it. So
yes, absolutely. And so as the cost to conduct these attacks, right, has gotten lower. Obviously, the expectation is that we see more of this, right? And that's definitely something we've seen. The use of AI to do deep fakes, the phishing attacks to have people hop on calls to steal information, right? And so these vectors are getting much cheaper to do at scale, and so we're seeing a lot more of that.
Yeah, and if you're thinking about what other let's say benefits, so I mean, can AI bring to the table? We talked about agentic layer. Do you see any other ways how it can benefit people besides that?
Yeah, I think what we're seeing now is the use of AI in a lot more of smart contract audits. I think OpenAI not too long ago, right, just published some new thought leadership on the idea of using AI to do smart contract audits. And I think as this tech develops, it's really important that we're not just vibe coding away without wherewithal, and there are kind of security checks in place to make sure that what we're publishing as an industry meets certain security criteria, and that we're recognizing that these protocols are being written responsibly, and AI can play a big role in that.
Yeah, that's an excellent topic. I think smart contract audits, it's a big deal. It's a big deal, yeah. Okay.
For sure.
Yeah, so we are closing to the end, and our last part it's about what can we expect for 2026. How do you see? What can we expect based on what we see in 2025 or whatever? I mean, it's just it might be other reasons why to proceed where we should go. Yeah.
For sure. I mean, there's definitely still the elephant in the room is still this gap between markets and then what's happening in terms of the adoption, right? Markets are still quite slow. Meanwhile, we're seeing, continued hiring across key posts for almost all major financial institutions, right? Everyone's looking for crypto talent, people that really understand the tech, and these and these financial institutions, they're not just looking to continue to do proof of concepts, right? Is how do we ship, production ready products? How do we actually start managing these funds on chain? how do we continue to actually build in the space? And so I think that's really exciting. On-chain, you know, it's always fun to look at the on-chain stuff. Stablecoins will obviously continue to be a very big part of how this year shapes out. I think as more institutions start to enter the space, we'll see companies get a lot more competitive, right? Whether that be stablecoins, tokenized stocks. I'm always pro competition, so I think having more institutions be interested in this will be very exciting for 2026.
Okay, so you mentioned adoption and institutional adoption on chain as well, right? What about stablecoins? What do we expect from stablecoins and tokenization? Going up, and up?
Yeah, I think that can be your baseline assumption is stablecoins and tokenized assets will continue to go up. Yeah, I think the exciting stuff really comes in around, you know, once it's on chain, how do we use it, right? How much of tokenized equities are being traded? How are, you know, tokenized T-bills being used on chain? Or is it simply just that we're tokenizing them and we're just sitting them on chain, right? That's a completely different use case than let's tokenize something and then put it into a DeFi protocol, right? Like let's borrow against it.
Exactly. That's the kind of the next step, and there's a lot of bottlenecks around it currently. Yeah. Okay. Ivan, thank you very much. It was a pleasure. I had a very good time. So thank you very much for having you here in our Dorsum Expert Talk. Yeah. What else to say? Thanks.
Thank you, Peter. No, it's been great. Yeah, had a lot of fun. Thank you for having me.
Thank you very much.